let's take a moment, look at the disclaimer. This content for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to tell you how BTA look at the market, how we analyze the market. This is Rod from BTA, and we are known as the middle traders. We are not going to get in at the exact bottom, and we are not going to get out at the exact top, but we will eat, make money in the middle. Okay, this is going to be a pre-market update before the market opens on Friday, June the 24th, 2022. I was stuck at the airport yesterday, so I didn't get a chance to do the end of day market update. So we're going to do a pre-market update before the market opens today, all right, on Friday. So this is the daily chart of the Dow Jones Industrial Average. This is the daily chart of the DIA, the ETF that tracks the Dow Jones Industrial Average, okay, the ETF. And right now, I'm going to zoom in so you can see this. Right now, we did close yesterday above the 5-day moving average, right? But we stalled right at the 9-day for the DIA. And you see the volume was lower, much lower, below average and much lower than the previous day. And so we still below this downward trending, now turning sideways 9-day moving average, and we got the downward trending 21-day moving average. But as of right now, the market looked like it's going to open a little higher this morning. So the DIA is actually trading right now in the pre-market at $309. So the 9-day moving average is $307.75. So we actually look like we may open up above the 9-day moving average. Okay, could look like we may open up, as of right now, it looked like we may open up around $309, but that may change. Okay, it's still early. We still got at least another hour and a half before the market opens, so that may change. So let's see how it opens up. But according to the close yesterday, we still closed below the downward trending to sideways 9-day moving average. Okay, so now let's look at the structural chart. Okay, that looks a little better. The structural chart looks a little better. Let me expand it a little bit and bring it up for you so you can see it. You see we closed above that 306.28 level. Okay, we finally closed above it yesterday. We closed above it, that 306.28 level, this overhead resistance level right here. And we're above the 305. So that's good. Okay, so we closed above the overhead resistance level for the DIA. All right. So we got to see if we can get above that 9-day moving average. We did close above these overhead resistance. So what I will look at right now, we're going to see how it opens up, see if it opens up above the 9-day, and see if we can get above yesterday's high. Okay. I mean, the day before yesterday's high. All right. Wednesday's high. And Wednesday's high point, okay, Wednesday's high was, the high was 307.68. And like I said, it looked like we're going to open up somewhere around 309. So we should open up above Wednesday's high also. And that's going to be good. If that's the case, we got to see if we're going to keep that upward momentum, and we may fill the gap up here. If we could get above the 312.53 level. All right, the 312.53 level. So the structural chart doesn't look that bad. Let's see how we open up in the morning. Okay. Let's open up this morning, rather. I'm sorry. Let's see how we open up this morning. Let's look at the momentum. Okay. Because this is key. All right. This is key. With the momentum here. All right. I want to expand this, and I want to zoom in on this area because this is very important. You see that RSI, the relative strength index right here, the relative strength index. You see we still below this red line. That's the 40 level. Okay, we well below the halfway, the 50-yard line. Okay, so right now, the sellers the momentum is still to the downside, and it's below 40. Okay, it's below 40. So that's showing us that the sellers, the momentum is still clearly in the downside, and the sellers are in control of the momentum for right now. Now, the Chaikin money flow has been giving us a bullish divergence with price, because as you see up here, we was making a lower low in price, but the Chaikin money flow was making a higher low, and it's turning positive. It's in the positive. It's in the green. So that's good. That's very good. But the RSI is still telling us that we are in negative territory for momentum. The Chaikin money flow is like a volume weighted RSI. So it incorporates volume into the RSI momentum. All right. But we want to see both of those confirming each other, really. We don't want to see them going in opposite directions. Now, as far as with the MACD and the stochastic, okay, the MACD is still has not given us a bullish crossover yet. If you notice, the yellow line is still below the crayon line. Okay, the yellow line is still below its signal line. It's turning up a little bit, but it haven't given us that bullish crossover where the yellow crosses above the blue. That's showing us that it's more positive momentum coming in. And we need to see this histogram. We need to see this histogram get into the green. All right, so the momentum has some work to do. We see that on the RSI. We see that on the MACD. The stochastics look a little better. It's above 20. It's above 20 now. We got a bullish crossover over here, and it's above 20. The yellow line's above 20. It's at 25. So we got to see what happens when the market opens this morning. All right, but the momentum it needs to improve a little bit. But we're breaking above. We're breaking above. Okay, we are starting to break above these overhead resistance levels. Now the volume is not really coming in that great. As you can see here, I put a trend line across the highs on the unbalanced volume, right? Let's zoom this in. Let's zoom this in a little bit. You see the green line? You see the green line there? That's the line of closing prices, right? This is the line of closing prices. I put a vertical line right across the previous high here. You see prices are trying to break above this level, all right? But the volume is not. The volume is not on the unbalanced volume. The accumulation distribution line is well above it, but I want to see that volume also above it, okay, on the unbalanced volume line. This is our most important volume indicator right here, the unbalanced volume line. We want to see the unbalanced volume line and the accumulation distribution line. If they both confirming each other, that's best. But we want to see that unbalanced volume line showing the volume first. Okay, that's our most important one. It's not there. So the volume needs to also improve. And we saw that with the volume bars. We saw that with the volume bars over here. Even though yesterday was an up day and we finally closed above the 5-day moving average, you see the volume was lower than the previous day and well below average. So we need to see some value coming in. We need to see a little bit more better momentum on the DIA, but it is looking a lot better. This chart, the structural chart, is starting to look a lot better. Let's go to the SPYs real fast, okay? So here's the SPY. And as of the close yesterday, you see we did close above the 5-day moving average, okay, the white line. We closed above the 5-day moving average, but we stopped right on this downward trend into sideways 9-day moving average, but we closed above the 5. That's good. See, the volume was lower than the previous day and well below average. The downward trend in 21-day moving average is still right there. Now, the 9-day moving average is right around 379 or something like that. In the pre-market right now, the SPY looks like it's going to open up around 380, 381. Okay, so that's going to be above the 9-day moving average. That's good. Okay, so it looks like if everything holds in the pre-market until the market opens in about another hour and 20 minutes, then maybe we're going to open up above the 9-day, but we still got that downward trending 21-day moving average, the yellow one, right above head. Okay, so the 9-day moving average is at 379, and it looks like we're going to open up around 381, 380, 381. So we're going to look like we may open up above the 9-day moving average. That's good. But let's look at the structural chart. If we open up at 381, that's great, because look at this right here. All right, look at this right here. Let me bring this up. Let me expand this just a little bit so you can see it. Give me 1 second here. Okay. Give me 1 second. Let me bring this up and over. And now let's zoom in. So if we open up above 380, that's actually very positive, because you see we got this overhead resistance right here that we've been watching, this horizontal at this fractal right here. That's the second low of that previous double bottom that we had. That's the second low right here at 380.54. If we open up around 381, we're going to get above this overhead resistance level, and we're going to get above this downward trend line right here. Okay, we should get above that also. That's very positive. If we can hold that, maybe we could trade up to 384, get above the first low of the double bottom, and then maybe the next stop will be up here at 397. All right, so let's see what happened. All right, well, we got to see how we open up, but if we open up at 381, we will get above that overhead resistance on the structural chart and that internal downward trend line. Okay, but at 397, if we go up to the next level, if we break above all that and then get above 384, okay, but 384, the first low of the previous double bottom, this overhead resistance level right here, 384, this overhead resistance level right here at this fractal, this 384 level is very important, because look, let's go back to our moving average chart. You see the 389 is the 21-day moving average. So once we get above that 384, we got to look for 389. And then we got that weekly overhead resistance level right here at 397. Okay, so this is what we have to look at. But if we open up at 381, that's going to be very positive. All right, so now let's look at the momentum with the RSI. See, it's not really that great. The momentum is not that great. The prices are moving, and price is the only thing that pays, granted. But look at the momentum on the RSI right here. Look at the momentum on the RSI. It's still down in the 40 level, well below the 50-yard line, okay, well below 50. That's not good. And even though we did have that bullish divergence where the Chaikin money flow is making higher lows while price was making lower lows, the Chaikin money flow is still in the negative for the SPY. At least on the DIA, it did turn positive, okay? But on the SPY, it's still negative. That's not good, okay? That's not good. Now let's look at the MACD real quick. Okay, look at the MACD and look at the stochastic. All right. So if you look at the MACD right here, we have not gotten a bullish crossover on the MACD. The MACD line is still well below its signal line. It's trying to turn up, but it hasn't crossed over yet. And the histogram is still in the negative, but it is improving, showing that the momentum to the downside is slowing. So this is positive, but we need to see a bullish crossover here. The stochastic did give us a bullish crossover, and it's above 20, so that's good. But the momentum has to improve a little bit. That's the bottom line. Prices are moving. On the structural chart, prices are moving, but the momentum has to improve a little bit. Let's go now to the unbalanced volume and see what the volume looks like. Okay, and let's clear some of these lines off of here. So you see the unbalanced volume for the SPY is looking similar to the DIA. Right? We're looking at the SPY, the ETF that tracks the Standard & Poor's 500. I hope I said that. If I didn't, I apologize. We've been looking at the SPY now, the ETF that tracks the Standard & Poor's 500. And you see, here's the previous high. Here's the vertical line right here. Okay. Now look, prices are trying to break above its previous high, but look at the unbalanced volume. The previous high is over here. So I got to adjust this line. I don't know why it got out of whack on us, but let's delete this and let's put the new one down here. Okay. The previous highs are right around here. All right. You see how far you're away from the previous highs? Once again, just like the DIA, the SPY, just like the DIA we looked at previously, the DIA accumulation distribution line is above its previous high. But the unbalanced volume line is well below it. Okay. That's not really what we want to see. We want to see this thing confirming each other. And if anything, like I said before, the unbalanced volume line is our most important line volume indicator. Okay, and let's put a trend line across the downtrending on balance volume line, and you can see how far away you from breaking it. Okay, you can see how far away you are from breaking it. So the volume has to improve. The volume has to improve, and the momentum has to improve. But the chart is looking a lot better. The chart is looking a lot better. So it looked like it may open up also above its overhead resistance level. Let's look at the Qs. Now the Qs are very interesting. I'll be honest with you, the Qs are very interesting right now. Look at the Qs. Okay, if you look at the Qs, all right, you see we closed above the 5 and the 9. Okay, we closed above the 5 and the 9 yesterday. All right, right here you can see that we closed above the 5 and the 9, and we have this downward trend in 21-day moving average. But the volume was lower than the previous day and is well below average. We don't want to see a rebound rally on low volume. That's just not what we want to see. We do not want to see a rebound rally on low volume. That's not good. And we're seeing lower volume across the board, okay, for the QQQs, all right? But now, this is the QQQ, this is the ETF that tracks the NASDAQ, specifically the NASDAQ 100, right? But I want to show you something real fast. Let's go to our index comparison chart. And if we look at the NASDAQ right here, this is the NASDAQ. This is the actual ETF itself. Okay, this is the actual ETF itself. And if we zoom in here, if we zoom in on this action a little bit, look, you see this volume here? This is today's action, right? This is today's action. You saw the QQQs had lower volume than the previous day, right? It specifically tracks the NASDAQ 100. But when we look at the NASDAQ composite, the actual index itself, see the volume was slightly above the previous day's volume? Just slightly above the previous day's volume. Okay, the volume yesterday was, the volume yesterday was 5,088,000. 5,088,000, right? 5,088,000. The volume the previous day was 5,020,000. You see the difference there? 5,020,000 compared to 5,088,000. So the volume on Thursday was slightly higher than Wednesday. And we had an update, and the index itself closed up 1.6%. So this is actually a follow-through day. All right, this is actually a follow-through day because we had an up day. We had an up day, right? We had an up day on higher volume than the previous day, and the percentage change was more than 1.25%, which is the minimum. It was 1.6%. So this actually qualifies as a follow-through day. The problem is on the NASDAQ, it's an unverified follow-through day. If you read the article we put up on the blog, on the website, browntradeacademy.com, you will see we called it a unverified follow-through day. Okay, so technically, this is our follow-through day. Okay, yesterday was a follow-through day on the NASDAQ. But it's unverified because on the trading platform, we have above average volume. But if you look at MarketSmith showing a little bit below. On the trading platform, we have higher volume than the previous day. But it's unverified because on MarketSmith, it showed a slightly lower volume than the previous day. So we have a follow-through day here on the NASDAQ, but we call it an unverified follow-through day because the volume on the platform here is showing a little higher volume than the previous day, but MarketSmith is showing a little lower volume than the previous day. So the volume, okay, is lower than the previous day on MarketSmith. All right, but it's higher than the previous day on the trading platform, as you can see here. That's unverified. We want both platforms showing the same thing. So what it's basically telling you is that the volume was not that impressive on this follow-through day, because if it was really impressive, we'd see it's higher than the previous day on both platforms. All right, it wouldn't be no discrepancy there. It's such a small difference in the volume from the previous day until it's a discrepancy. When you get a follow-through day, you want to see that volume way higher than the previous day. Okay, so you can see strong institutional buying telling you that the big institutional investors, the large investors, are buying in. Okay, so this is an unverified follow through day, but it is a follow through day, but it's unverified. Okay, so we got to keep an eye on that. That should be a sign of caution. But then when you look at the QQQs itself, look at the QQQs. See, you would figure that the QQQs, if the follow through day was that great, you would have figured the ETF that tracks the NASDAQ would have had some very impressive volume, right? At least higher than the previous day, but it wasn't. So this follow through day is unverified. Technically it's there, but it's unverified. We need to be careful, okay? Caution is warranted right now. Now, as far as the structural chart, okay, goes, look, the structural chart, just like the other major index ETFs, we looked at the Standard & Poor's and the DIA. On the structural chart, you can see that we almost closed above the 284.94 level. We almost closed above it. We closed right at it yesterday. We closed at 284.85, and this overhead resistance level right here from the first fractal right here is at 284.94. But in the pre-market right now, okay, the Qs look like it's going to open up around 287. So we open up well above this right here. But we open up at 287. Now, mind you, if we open up at 287, we open up well above this overhead resistance level. That's okay, granted. That's granted. But 287, what's right here, y'all? What's right here? A downward trending 21-day moving average. It's right overhead. Okay? Downward trending 21-day moving average is right here at 290. So if we open up at 287, we could trade up maybe $3 more. Okay? $3 more, and then we right at 290. An overhead downward trending 21-day moving average at 290. We got to be careful. That 21-day moving average can act as some key overhead resistance on the daily chart. All right. And we can see that the momentum, just like on all the rest of the major market index ETFs, the momentum is not that great. Look, we still below the 50-yard line. We a little above 40 on the QQQs, but we still below the 50-yard line. We do have that bullish divergence on the Chaikin money flow, making higher lows with prices making lower lows, but the histogram is still in the red. Okay, the histogram for the Chaikin money flow is still in the red. So the volume-weighted RSI, which is the Chaikin money flow, is not really confirming it neither. Okay, so the momentum is not that great. All right, the momentum is not that great. And we look at the MACD and the stochastic. Yeah, the stochastic is looking a lot better. But the MACD still have not given us the bullish crossover. All right, we got a bullish divergence. Granted, we got lower lows on price, but we got higher lows on the MACD, and we're almost at a bullish crossover. When the market opens today, this is probably going to give us a bullish crossover. Okay, so we definitely probably going to get a bullish crossover on the MACD, and the histogram is going to turn to the green side, more than likely, when we open up. So we're going to open up on the Qs around 287. That's probably going to be enough to give us a bullish crossover at the open. Okay? But look at the stochastic. It's above 20. We got a bullish crossover on the stochastic, and it's above 20. The KST on all three of the major indexes, the DIA, the SPY, and the major index ETFs, right? That's what we're looking at, the ETFs. The DIA, the SPY, and the QQQs are, all three of them on the KST, it's still got a bearish crossover and pointing to the downside. All three of them, okay? All three of them are doing that. So it looks like we're going to open up a little higher on the structural chart, but the momentum on all three is really not that great. Now, I have to give one thing to the QQQs, okay? The unbalanced volume line is looking a lot better on the QQQs than any of the other major indexes. So look at that. So, I mean, I can't deny that, okay? So look, you got the green line, which is the line of closing prices up top here. You see the high, the previous high, the vertical line going across it. We got the horizontal line going here. The closing prices that broke above it. Look at the unbalanced volume. It has broke above its previous high on the unbalanced volume also. And the accumulation distribution line has broke above its previous high. You can see that. And the price volume trend is also peaking up above its previous high. So all three volume lines are showing that it is some volume coming in on the unbalanced volume, accumulation distribution, and the price volume trend. So our volume line analysis, our line analysis of volume, okay, it is showing volume is coming in, but we can't see it that great on the actual bar analysis, the volume bar analysis. We don't see it that great, but you can see it coming in on the unbalanced volume and the accumulation distribution line and the price volume trend. You can see it coming in. All right, so we're probably going to get a bullish crossover on the MACD. Volume is going to move up a little higher at the open. Prices are breaking above its structural levels. And we do have an unconfirmed, unverified follow-through day on the NASDAQ. Unverified follow-through day on the NASDAQ. So, listen, the NASDAQ is looking very interesting right now. I can't deny that. The NASDAQ is looking very interesting right now. If things continue to move in this direction, then we're probably going to end up taking a nibble on the NASDAQ, okay? But it is some things we got to watch out for. We got to be careful. And I'm just going to bring this to our attention. Yeah, we're going to break above these overhead resistance levels at the open. Yeah, we're going to get above that on the structural chart. But you got the 21-day moving average looking at you right in the face at 290. Okay? So be careful. All right? So be careful. And then the next thing, I'm just going to bring this to our attention. We're going to do a better analysis later. All right? But I need to bring it to your attention. I told y'all, do not disregard a weekly chart. This is not financial advice. But wouldn't it be wonderful if it was? Wouldn't it be great if it was? But it's not. But if it was, you may not lose a lot of money. Look at the weekly chart of the QQQs. You see what's right overhead right here? 150-week moving average at 292. 150-week moving average at 292. Okay? 292. All right? You got an 8-week moving average right above head at 295. Okay? 8-week at 295. Look what's right above, that's below all of it, is the 4-week moving average, okay, at 284. You see all that overhead resistance right there? Forget about the 13-week that's up top. Okay, I'm telling you, it's a lot of overhead resistance right here that the NASDAQ, the QQQs, have to get through. Okay, and you see how low the volume was compared to last week. Well, granted, last week had triple witching, right? So we'll let that go. But look at the volume, how low it is compared to last week. But the main thing is that overhead resistance on the weekly chart. Be careful. Don't get your head handed to you. I'm telling you, it's a lot of overhead resistance right here. We said we might take a nibble. But you want to take a nibble on something that's going into a lot of overhead resistance. Look, remember, you got the 150-week moving average at 292. You got the 21-week moving average at 290. Okay? 21-week moving average, 21-day moving average at 290. You got let's start that over. The 150-week moving average on the weekly chart is at 292. I want to make sure this is clear. The 21-day moving average on the daily chart is at 290. So if you could get above the 21-day, you're looking right at the 150-week moving average at 292. Then you got the 4-week moving average at 284. Okay, so it looks like we're going to open up above the 4-week. Can we close above the 4-week? Well, if we do close above the 4-week, then you got the 290 area, which is the 21-day moving average that you got to get above. And then you got the 292 area that you got to give above. That is the 150-week moving average. You see all this overhead resistance before you get to this weekly overhead resistance level right here, which is, okay, at 297. This long-term weekly resistance level right here, which is at 297. Yeah, we might go to it, but you could trade up to it and collapse also. So this is why it's dangerous to trade when you're below all those long-term weekly key moving averages. Be careful. Be careful. Be careful. It could be dangerous. Is it really a high probability trade? It may not be. Okay, it just may not be. All right. So with that being said, that's going to be it for this pre-market analysis. We'll monitor this stuff all through the day. The NASDAQ is looking very interesting, but it is a lot of overhead resistance. All the major index ETFs are looking decent on their structural chart, but the momentum is not looking that great on the others, and the volume analysis is not looking that great on the others. But we did get the follow through on the NASDAQ. The NASDAQ, we did get the follow through today, unverified. The Qs is looking a lot better. We do have the volume coming in on the Qs with the volume analysis, but the weekly chart, a lot of overhead resistance. So caution, caution, caution. And we'll just finish this up. One quick peek at the IWM. Well, it's still below. Okay, it's still below its March 2020 highs. You see that big red thick line right there? See that big red thick line right there? We closed below we still closed below yesterday, the March 2020 highs. But right now it looks like it's going to open just above it. The March 2020 highs is at 170.56. It looked like we're going to open up right around 171 if everything holds the same right now in the pre-market. So be careful. Be careful. The IWM is definitely a wait and see. Definitely a wait and see. It's not even nothing to think about on the IWM, okay? Because when you look at the weekly chart, you can see we're still below the 200-week moving average. Be careful. See y'all in the next video.